Let's turn now to the very public breakup between the President of the United States and the world's richest man. Tesla bouncing back somewhat today, still down 13% since Monday on the back of yesterday's slide. That's its second worst week of the year. Meantime, the New York Times reporting President Trump has decided to sell the red Tesla he got in March and told everyone else to buy. You're looking at a live shot of that car still parked on the West Executive Avenue at the White House. And joining us now is Ross Gerber Kawasaki CEO and President, and Brett Winton, ARK Investment Chief Futurist and a member of the ARK Venture Investment Committee. Both are shareholders in Tesla. Welcome, guys. Happy Friday. Brett, how did you calculate the valuation benefit that Tesla got from Musk's closeness to the president and from, that Tesla buying endorsement that's sitting there in the driveway still? And how do you kind of reverse that out now?
I mean, I think it's clear that Elon Musk has a different strategic view of the playing field than almost anybody else does. And on the surface, his actions may appear erratic, but if you look over time, those actions lead to long-term value creation for shareholders and advance his companies towards meeting their mission. And we think between Neuralink, SpaceX, Tesla, these are all companies that are actively changing the world. And that's why we're invested in them. And we believe that he's leading them in that direction, assertively and effectively.
Ross, that sounds to me like the trust Elon, look how right he's been so far based on stock performance. Why is that not right here?
Well, this isn't the same Elon that we were dealing with 5 years ago, that's for sure. And I think that the toll that his lifestyle has taken on him has finally reached a point where it's been like monumentally detrimental to the future vision that Brett's talking about. So as much as I like the vision of Tesla that Elon has for its future, it has to be actualized. And to actualize that, he needs support from the United States government. Tesla is a government-supported entity. It receives billions of dollars a year in subsidies from the U.S. government, and losing these subsidies are really, really bad for Tesla. And many of Elon's other businesses will be greatly affected if the government begins working against him. So this is a strategic error of epic proportions, and the sooner that he can apologize to Trump and try to get something back in his good graces, the better. But now having all the MAGAs selling their Teslas is about the worst case scenario you could imagine for Tesla.
Brett, I mean, the fact that Tesla's down, 15% now on the week, and we know a lot of that happened yesterday. There's a little bit of bounce back today. You just mentioned his other companies, which are privately held, SpaceX, there's Boring, there's Neuralink, XAI as well. Is this a situation that has ripple effects to all of the different companies? And if so, how do you quantify the impact to the broader Musk ecosystem, if you will, or is it outsized for Tesla?
Sure. I mean, because we have exposures to most of those companies, we assess, the thesis risk against those companies with any meaningful piece of news that occurs. And broadly, the reason that those companies, that we invest in those companies is because they are doing things that no other company in the world can do. The incremental car sale isn't as important to Tesla as launching robotaxi this week. Neuralink has installed its devices more than any other brain-computer interface company in the world. And SpaceX is really the only game in town in terms of, lofting astronauts to the space station, as well as going to Mars. So there is like the near-term volatility, disruptive innovation looked at very closely, often appears messy. And our job is to manage that exposure on behalf of our clients. It's why active management is so important.